Hello everyone. This is Sterling Price Trader. I'll be doing the weekend commentary, stroke the top-down analysis for this coming week. So the coming week, which will be 28th on Sunday, that is 27th on Sunday rather, which will be 28th on Monday. So that week's top-down analysis, I'll be sharing it with you, and I'll also touch on previous week. This just concluded week, how during my last week analysis it was delivered. So wasting no time, I'll get into the chart, and I'll be starting with let's see the British pound. So I expand the chart. Usually I take you to the monthly. So this is not 30 minutes, the monthly time frame. So the 1 month is over here. So expand it. So this is the monthly chart for the British pound. Let me make it more vertical this way, okay? So last week we spoke about how we wanted price to gravitate lower. There's not much of information here on the monthly, just that this low has been traded through, and we are actually approaching this order block over here. So I'm watching this closely, and that's a level here. The monthly stroke weekly order block open. So if this eventually gives way, then we actually will be going really deep discount. So this is a CB that was actually overlapped June, July, going to September. So the weekly chart is where I'll start from for the British pound. So here we are on the weekly time frame. So last week I told you I'm bearish. I'm not bullish in any way, shape or form. And as we can see, we had another down close candle, which was all spoken about. All these levels, we talked about it, how we want it to be disrespected, and we can see how the body of this candle closed really deep beyond this candle scope. So what this level is actually is make it really well. The opening closing price here is 130, 523, 39. So this is previous week still. So, and what I wanted to be more specific about is this level, which is the lower quadrant. I'll just put a horizontal line there, so I can delete that Fibonacci. So that's a level here. Currently to run below the image. So I'll take away the Fibonacci. So this level is previous 2 weeks ago. Now it's no more previous 2 weeks ago. 2 weeks ago till lower quadrant level. So that's that level there at 1.29935. So I'll be talking about why I highlighted that level once we get to the lower time frame. But my expectation going into this week is actually still bearish. Yeah, and I'll be telling the reason, by the way, why I'm still bearish. So we can see this inefficiency, which I actually take out the background due to some reasons, but this is it. We can see how it was actually gone through. We went really deep and almost closing it completely. So opening next week, this I'll be treating like an inversion. If you ever look at this one, it's going down. So if it disrespects it well, so coming into here, just be selling short to actually see more discount level. So my draw on liquidity, I'll be saying that real quick. I'm watching very well if price will actually want to gravitate lower to first of all this level, which is the consequent the main threshold rather of the weekly order block. So this is it, weekly bullish order block main threshold, which is also the weekly deep discount BC consequent encroachment. So there's about two higher time frame level. The BC, by the way, is this inefficiency, this candle from this here. So they're about stacked together, not exactly precise, but relatively almost the same price level. So to the daily, okay. So on we saw our price last week, before the previous week, before this just concluded week, which was here, price went in here and we had some levels on the chart and everything actually delivered like I expected, and we traded to the discount level where I traded into this inefficiency over here. So look closely here. We had down close candle all through except on Thursday. Yes, Thursday. Thursday had an up close candle, and that's the reason why this week I'll actually not expect so much of a premium retracement, because Thursday, Friday already went into the premium, like they really did that, really very great, and Friday actually showed willingness to want to go down. So I won't be expecting next week to have too much of a premium retracement. By the way, that will be more effective on the European dollar, because the British. Sorry for the noise. It's a table right in front of me. So the European dollar is very weak, and it doesn't really. I don't really expect premium. The British pound, on the way, it actually does a lot of retracement, and it's like it's not very. Will I say it's weak? European dollar is stronger to the downside, but this one is weak. It's lethargic, so it can retrace well. So I have to be very flexible with the British pound. So this level, this right here, is the order block opening price here, which is this level, daily bearish order block opening price at 1.2990, and this level is that weekly tail consequent encroachment I just highlighted. The reason why I say I highlighted it is because it was a very important level for Friday. For those who want to get an entry on Friday, it was a very key level. So there's just not so too much information here. It's just the frame is, this is the bearish order block opening price, and see all candles are below it. So in as much this remains, this opening price here remains, in as much it remains this way, that no higher time frame candle is closing above it. When I say higher time frame candle, by the way, I mean the 4 hour and the daily time frame. So if the 4 hour and daily time frame are unable, those time frame, if their candles are unable to close above that level, which is 1.29, no here, no not here, this 1.29900. So that level, if all those higher time frame if the higher time frame are able to close above it, then it's a plus sign for me that will be going lower, and the drawn liquidity first will be just very easy. That's previous week lows, which is Wednesday low, 1.29072. So that's sell side drawn liquidity. Yeah, so I'll be watching that for sell side. That will be the one of the easiest. They're almost relative, and there's an inefficiency there. This is an inefficiency. I will not be putting it on because I have this one on already, so it will just look too messy. So that's the inefficiency, and I told you I like price to actually leave this level, reach this level, that consequent encroachment, and hopefully if it reaches here. And one more thing, let me go to the weekly time frame. So the weekly time frame here, this is a balanced price range. This is not the exact way it should be drawn. It's this high totally have been drawn to this level here. But the reason I didn't do that is because it's gonna have too much complication. Like I just don't like too much of annotations on my chart. Even these ones to me are too much, but I can bear with this one. So here I said something as a caveat, which I'll be showing here in a moment. So it's a weekly BPR, it is balanced price range. LLOD, I said it in my last week's video. You can check it out. It's the video before this one, the weekly top-down analysis for the just concluded week. So it's the last line of defense. LLOD means last line of defense. The BPR here is balanced price range. So weekly balanced price range. That is, it's my last line of defense for the bull. What do I mean? For if there's still a possibility for us to see buy side delivery, this is a determinant, which means if this level is traded to, that is, if it overlaps with a higher time frame candle, I'll repeat that. If it overlaps with a higher time frame candle, which is the 4-hour or the daily time frame, then I'll expect the British pound to actually, just roll down to the end of the year. Obviously, I can be wrong, but that level is very important for me, which does not go without saying. If that level show respecting, that is, failures of higher time frame candle to close below it, then there might be a deeper retracement, which can be a reversal and a change in directional price delivery. So that's the level I want to touch about. We'll stop at the daily time frame, and I'll be going to the 4-hour. The daily time frame, I already told you this order block. So I'm watching this order block, the opening price, and I'll be telling you why I framed this level here. This level is the consequent encroachment of Thursday's week. So the midpoint of Tuesday's week, previous week's Tuesday, this week's Tuesday, the consequent, because the market has not opened yet. So the consequent encroachment of that candle is right here at this red line, 1.30001. So that's previous week's Tuesdays. That this just concluded week's Tuesday daily week consequent encroachment. So you can see LLOD here, which means last line of defense. That is telling you that I don't want price to get to that level, and if price gets to that level, it should immediately fall, or else price might be actually directional price delivery might change. There might be a change in sentiment, and I'd rather sit still or switch my bias from bearish to bullish. So if you want to know my bias, for those who didn't hear when I said it's bearish, I'm not bullish at all. I'm bearish. So to the 4-hour time frame. So I told it to be commentary stroke top-down analysis. So this was levels. I left these levels on just because of this video, and I'll be taking it off even in this video. This buy side LLOD for the bears is the last line of defense I framed last week, and this line this one was actually an order block level, the 4-hour bearish order block main threshold. I anticipate higher time frame closure at or below here. That is, no higher time frame candle should close above this level. Okay, so, and we saw this was Friday. Sunday couldn't even trade to that level. Sunday opened right here, and we fell lower. I actually mentioned this level before the week's open, which was on Saturday, before this last week just concluded. That was the British pound 4-hour order block opening price. So, and I said I want to see respect. This inefficiency also was delineated. I canceled that out during this my current analysis that I'm delivering to you. So not in this video, before I started it. So this inefficiency also, I marked it out, and this, look at how the bodies were. It was a little bit above the consequent encroachment of this CB, but it was respected. So this last line of defense was not even traded to, and that's why you can see throughout the week we get a nice sell side delivery, the retracement on Thursday, and so I'll be taking it off, like I said, because it's done already. So I left it just to touch on it as a commentary, and these levels, I'll be taking this also off, and this level also I'll be taking them off. Good. So my chart is looking more attractive to me now, so more better. So this level, remember, is the weekly level I outlined, which is 2 weeks ago till lower quadrant level. So the only reason why I liked that level is not because I need it for this coming week, but I want to touch on it because it was a really great opportunity for selling short like it was a nice array which price reached. You can even see body closed below it. The 4 hour body both were closing below it, which was actually good levels. I'll be talking about that maybe in the 50 minutes or 60 minutes time frame. So but for now, so maybe I should make it ghosted here. Let's see. Okay, so this is now my expectation for this coming week. I even have this level already here. So let me just leave that blue one there. Since we already talked about it, that's Wednesday low, and I'll be looking for price to trade to that level. So what do I expect for this coming week now? Simple. Price last week price opened, we trade lower Monday, Tuesday, a little bit of retracement. Wednesday, Thursday really get up. Then Friday went a little bit higher than Thursday's high. We took out, let me show you that on the daily time frame. So on the daily time frame, you can see this is Thursday's and this is Wednesday. Friday went ahead, took out Thursday's high, and this is the left top corner. You can see OHLC, that's open high low close. So the high was taken out here. Friday's high was 1.29987. Wednesday high was 1.29950. So both Thursday and Wednesday high was swept by Friday. That is enough of a premium for me. That's why I say this next week I won't be expecting so much of a premium retracement, because we did that already on Friday and Thursday. So back to the 4 hour time frame. So Friday trade above those 2 days high, which is Wednesday and Thursday's high, and went right deep into premium and fell lower. It's a very good signature. This low is yet to be taken out, this low is yet to be taken out, and obviously you can see some inefficiency here. It's yet to be taken out. So now, where is the premium level? By the way, this inefficiency is still the one I show you on the daily time frame, which is that BC. I want that to act as an inversion if you ever look up. What do I mean? I'm anticipating Sunday, Monday, Tuesday for candle to close. Let me make it very so anyone can easily understand what I'm talking about. So I'm anticipating next week to open and close below this level. Once this inefficiency is closed below, a return to it will be an opportunity to be able to go short based on your time and your model to target this sell side here. So that's why I'm leaving it there. That inefficiency is very important for me. It's like a validator that, okay, wow, it supercharges the fact that the price will be offering sell side delivery, but it can actually, it's not impossible. Price can actually trade below it and still come above it. I don't want to see that, but it's possible. So for anybody who will go into next week and be like, oh, then next week you saw something like what I just said now, below and above, then you'll be like, oh, I'm wrong. No, it's possible. But for high probability scenarios, price should just be lower and shouldn't, go above that. So I would not like to see that. Once it's overlapped to the downside, it should be able to keep it sustained. At least till Wednesday by 11 a.m. This coming week is NFP on Friday, so NFP can do something really crazy, really crazy. So I don't try to play around with that. NFP is not something to play about with. So here is my levels now. So this time frame is good. I'll be talking about everything you are seeing. So this level, which is the weekly tail concentrate lower quadrant, you can see it was reached multiple times. Friday came in here, it was there, but notice something, all bodies were below that. What is that telling you? As a signature, price is not wanting to close above that level, even though it went there multiple times. 1, 2, 3, 4. Price didn't close above that on this time frame. It didn't. It's respecting that level. Normally, you wouldn't even know that level is existing, if you don't know how to use wicks and tail of candles. But with the knowledge of that, you can see that level. So that kind of respect for anyone who will be wanting to go short on Friday, it's a plus. It's a plus signature for you to know that order flow is bearish. Because once you start seeing body closing above here, especially on the 4-hour time frame, then you might want to be a little bit less aggressive if you're going short. But once you see this, then it's like a confirmation. Good, you're on side, you can go short, you're on side. So obviously on the 15-minute time frame, there's a little bit of, consolidation above it. But on the 60-minute time frame here, it's very clear. You can see it. Candles were not closing above that, and that was opportunity. It's a confirmation for me. It's like, okay, this is a confirmation. You can see it came here 1, 2, 3 before the 10 o'clock here. It's a confirmation. They all went above what came below. So that's why I had that level on. That's how you can use wicks. So when I'm highlighting wicks and tails, consequent encroachment or lower levels, quadrant levels or upper quadrant levels, you understand how you can actually use them. They can be an entry, whatever, confirmation or exit. Okay. So this level here is Tuesday's consequent encroachment week. So I spoke about it. So that level I deleted right now is a tail. This is tail. It's not just week. It's the weekly tail lower quadrant. So you should know the difference between a tail and a wick. So that's the level there. It's a tail lower quadrant. So I'll be taking it off. I'll be dealing with this, which is Tuesday's daily week consequent encroachment. I spoke about that in this video. You can rewind it. It's the last line of defense, which means I don't want candles to be trading there at all. Like this coming week, I don't have business here. I don't want candles to be, if it gets here, giving tolerance for the, volatility of the British pound, which it's lethargic. It's having so much retracement compared to the European dollar. It can reach there, but immediately should shoot lower. If it's staying there for a long time, then that's telling you something. Order flow might be shifting. So that's the level there. That's the level. So by the way, this level also is an immediate rebalance. Weekly bearish immediate rebalance. If price turns around here and never gets here again after Wednesday, that is this week, I'll show you the level on the weekly. Why? Let me just show it to avoid complication. So you can see that level is this candle's low. So that's the level there. So back to the 60-minute time frame. So if price turns around here and never gets here again after Wednesday, then there's a high probability for a large range down close candle, except save NFP effect. That is, with an exception of NFP effect. NFP does not respect all these things we're saying here. It just that 30 minutes can be seriously destructible, So after Wednesday, if no candles is coming here, then I'll be expecting large range down close candle to actually, I told you Thursday was a retracement and Friday went even to a higher premium. So it's reasonable to see a large range down close candle. Like I even said last week, we didn't see so much of that, but I want to really see some candles going down to fulfill, because this guy, the British pound should catch up with the European dollar. It should try to catch up. It might not catch up eventually, but it should try to catch up by depicting speed in price. So that's the level. The bearish immediate rebalance that I'll be looking at. I'll be looking at that level. So I'll be telling you, I'm trying to scale this chart to the best possible way. I don't know if this will be okay. Let me try to do something like this. Okay. So here is a CB. It's premium for me here. This inefficiency over here. This is why I have to be scaling it around. So this inefficiency over here. Not here. This inefficiency over here, it's a CB. It's a 60-minute CB. That's a premium level. That price, I'm aligning price. Price can go there. It can exceed this potential immediate rebalance and go in here. Okay? This level, this one is a little bit fainty. This level is Friday's week lower quadrant level. which is a very nice area for a turnaround. Like ideally, this is I won't want price to exit this level. Let me make it a little bit more obvious. So on the daily time frame, I like to show you what I'm talking about so no one will be lost. You can see Friday, this is the lower quadrant, this is the consequent encroachment. That is this week, this is the middle, and this is the quarter. Dividing it by 4, the lower quarter, the upper quarter will be around here. But this is the like 25%, 50%. This is the midpoint. So this is the Friday's week consequent encroachment, and this is the lower quadrant. So back to the 60-minute time frame. So those are the levels I'm talking about here. So price can get here, it's in sync with this CB. So if price gets here, to me, I would like this as it's enough. Like this is where I'm content that this is enough of retracement for me, because I told I don't want to see too deep a retracement, because Thursday, Friday already repriced to premium. So it's a ideal level for premium retracement. Like I like that level. But I always have to be flexible with price. It's something I learned over time. Actually talks about that too. You can't impose your will on price. The price will do whatever it does. You just have to be fluid, be in sync, and be flexible. That's why I included this line, which is the same Friday's week, but this time around the consequent encroachment. So based on the British pound lethargy, which is its unwillingness to want it to go lower with so much of retracement back and forth, it could easily retrace up here. So I'm not saying it shouldn't exit this lower quadrant, but it can actually come as far as this consequent encroachment at 1.29869. So if price gets there, I'm not going to arm wrestle it, and I'll be aligned for that. It's okay for me. It's okay by me rather, and it can do that, and it should reject quickly. But what I'm not okay with is this level here. You can see here. This high, it shouldn't. I don't want that high to be taken out. That's Friday's high, 1.29987. I don't want that to be taken out. Like to me, it's no. I don't want it. Not I demand it shouldn't, but I don't want it. But I'm giving a tolerance. It can be possible, but for Monday, Tuesday, Wednesday, I don't want that. NFP can obviously ramp higher and do whatever it wants to do, but Monday, Tuesday, Wednesday, I want them to stay below here. If this level gets taken out and the price come as far as this last line of defense, then I will rather sit on the sidelines or switch my bias to just trading very just little scalps and not just pressing on the bearish bias anymore. But in as much price didn't take that high here, remember 1.29987, then I'll be okay with that. So I won't be wasting much time here, so I'll be going to the European dollar soon. And this immediate rebalance, by the way, it's like it was used here, but I used to use it as a reusable, because that one's on the weekly now. And if next week open, because if you see it on the weekly now, it looks clean. It's just on this time frame that it's looking a little bit complex. But here on the weekly, there's no much complexity to it. This candle comes close lower. So next week can easily open, trade into it, and even go beyond it, but still act like a good effect to send price, which means price could actually trade to it and exit it and come down and still touch it. Let's say Sunday open went high, then on Monday we're below here, and maybe during London or the New York session it touches here. It can be a good entry, a good spot to one sell short, you understand? So that's what I mean by it can be reused. So I tell you what all these levels are: consequent encroachment, lower quadrant, CB, immediate rebalance on the weekly. I don't want taboo areas, last line of defense zones. So I don't want those levels. Well, this rejection block here, price can go there. I'm just giving tolerance for this British pound, because it's just, but for ideal scenario, this level is enough for me. This is my flexibility zone. Once I'm seeing all these levels here, anything beyond this consequent encroachment here, anything beyond here, it's low probability for me. Like the probability for sell side delivery is reduced drastically. So this is sell side here, which is Friday's London sell side. So if Sunday open and did not sweep this level, then it becomes a draw on liquidity for Monday. So let's say Sunday open and just was, consolidating or just was just doing the premium because the high can form on Sunday, and just went to here or even just couldn't go there on Monday, whatever, just throughout Sunday and Monday opened and we're above here. We didn't trade below this level at 1.29560. Then Monday, this will be a good draw on liquidity for price. So you can use that to target for a sell side liquidity. Very easy, very easy. If Sunday did not, because Sunday can easily open, take it out and see go up, which is good. And if it doesn't do that, it's better because it's like, wow, it creates more, it builds more sentiment, more excitement that this is a strong support, and that idea is flawed. So we just have to, price will want to take the sell stops out that is there. And this is my ideal signature. I explained why I used to put it there as phantom trend line. I just say that briefly, paying people to learn price action before I actually get into the ICT concept. This is what they'll say it's a diagonal support that buy as it touches it. So I used to use it as a supercharging effect to supercharge my directional price delivery. So once I see that kind of retail factor confluenting against me, what I simply do is, okay, that's a fake trend line. Then the low becomes what? Sell side liquidity. The line will be too much here, but let me delineate it. And that's 481. So it becomes a sell side liquidity for me, that low. So that's how I use the phantom trend line idea. That's why you see that line. It's not as if I'm using it to, no, I'm just trying to attack it. Like, okay, this is the idea, the region, retail. You study retail concept, that's it. They say diagonal support, So I'm attacking that because price is just inefficiency and liquidity. I won't talk too much on that. And this is a old new week opening gap. That's July, but it was still effective throughout this week. So if price overlaps this level, if it comes back here, it's can be used as a short entry. Like if price overlaps this level, it's a plus for sell side delivery. A plus means it increases the odds that price will be delivering sell side. So these are all my potential premium retracement level, and these are my draw liquidity. This low at 1.29560, the sell side liquidity at 1.29481. This, as a confirmation, you can use it as a target actually, this high and this low for the new week opening gap. And then absolutely here, this is 1.29070. Why I did not go to extreme, and okay, here I like this level. I told you the main threshold, that level. And what is level around here? No, this must be a very old level that I haven't taken out, so I'm taking that out. So this level also, I'm looking at that. This level is it's a key level for me, which is the main threshold. I spoke about that multiple times, so much I can't count now. So I'll be rushing out of here in less than 3 minutes to talk about the European dollar and get the video ended. So this is what I'm looking for. I want price to. So let me just show you something like this. So hopefully if Sunday can take this lower, it doesn't matter, but I just wanted to go in. And one more thing, this immediate rebalance, if something that can be really supercharging is if price did not even go above here, like price just turned around here until Wednesday, like price never gets above here, man. That's what I just said here. I just recall well. If price was low and just could not go above here, then I really want to see large range down close candle, with an exception of the NFP effect. That's before Thursday, Friday NFP. In as much price is below here, Monday, Tuesday, Wednesday, man, like that's like, it's like, okay, this level is not here. Unfortunately, it did get repriced too, but it's like a plus. It's a fortunate situation that I am very heavy and I want to fall lower. That's what I'm hearing British pound saying. If they could not trade above this 1.29739, so that's it. But if it goes above, I'm permitting that. I told you can use it. If it comes down, use that. You can use it as a sell side, as an entry. And this inefficiency right here. So I anticipate price trading below here, and it should act as what? Resistance to send price lower. You understand? Not support and resistance in terms of like, I'm using that idea to explain it so you can easily understand. Not that I trade support. No, we don't do trading and support and resistance. I'm just framing that idea that should price actually come trade below here. So if I anticipate price should close below here with body closures. So once price overlaps this area to the downside, I'll treat it as a resistance to send price lower. In other words, once price enters close below here, well, so I want price, if price will want to go here and it should send price lower. And one caveat is, the level is very key, and I really want price should not. I don't want to see something like it comes down and goes up. No. I don't want. Once it goes down here, it should be able to keep price sustained at least until Thursday. Then NFP can do whatever, but for Monday, Tuesday, Wednesday, I want, if price goes below here, it should not. I wouldn't want it to go above here anymore. This inefficiency. So I've spent so much time here. Will I be able to touch on the 15 minutes time frame? Still the same idea. Still the same. So what I was saying is, draw this real quick. Price should retrace. If it reaches here, that's super good, but super cool. But if it reaches here, fine. It can come here and then fall over to, go to that. It will not go just once this way, but, price, it doesn't just fall on a straight line, but that's just how I want to see it. Like, that's my directional bias. And this level is an inversion fair value gap for the 15 minutes time frame. So it's the best of the best. Like, if you're looking for the best of the best, to me, sometimes it doesn't give it, but it's the best of the best skills, and that's why you see BODB. So 15 minutes potential bearish inversion fair value gap. That is the best of the best, BODB, Q zone. Its consequent encroachment should what? Should not. It should be should not. So there's a typo there. Should not get traded to. So I'll read that again. Bearish inversion fair value gap, that is the balance, best of the best Q zone. It's consequently, that's the middle, should not get traded to for high probability sell side delivery. I anticipate an institutional order flow entry due impact as a signature and a plus for a high probability sell side delivery. Well, an institutional order flow introduces a partial entry into a inefficiency. So I want to see that kind of signature here, that if price will want to gravitate to this level, like as far as this level, then I want it to just like pop into it and immediately fall. Like it not fall like to the down, but it should just reject and give a displacement. Something like that 2022 model. Like say there's a high here, which it takes out. Let's say price retrace here, there's a high from here and it took out this high, it comes down here and take out a high here and enter here. Once it enter here, I don't want it to go all, just a little bit, and then it should displace like a nice displacement and can set the stage for any of your model. And you can be targeting these lows and this sell side and all this sell side we've spoken about before now. So that's that on the 15 minutes time frame. Again, this is the phantom trend line, this one over here, and this white line is, what's this white line? 15 minutes bearish. Okay, let's talk about that. But I think this was for last week. I was using that for last week, so it's causing some confusion here. Nope. So this is just everything I said is what I'm sticking to for now. So that's what we'll be doing. So quickly to the European dollar. I try to be fast here. I'll try my best. I'm out of time basically. So European dollar, we went into this inefficiency. Like I said, I want price to draw, and this line over here, I made it faint, but this is a level that was there in my last video for the top down analysis. I highlighted this. I told that's where I want price to go. Like that's the best of the best draw liquidity for me, and we traded there. I think Wednesday did that. Let's see. Yes, Wednesday traded there. So Wednesday, I said that on this week when this candle has not formed, so price was like this, then the other candle was absent, and I said I want that level to be like a best of the best. That's the draw liquidity. Like that's the best you should, like if I want to be I want to squeeze out the best possible juice out of this lemon, almost everything, that level is great for me, and we traded to that level last this just completed week. So that's it, and we mentioned all these levels on the monthly time frame. This is a bearish order block main threshold. I spoke about that last week. I won't talk too much on that this week, and this is for the weekly. This is the weekly. This three down close candle, 1, 2, 3. 1, 2, 3. The opening price is the opening price of the other block. I told you I want price to actually go into it, and look at how price goes into it. Like, it's telling you I'm heavy, and it's closed below all the quadrant level and consequent encroachment of this week still, of the week before this week still. This just completed week. The week that preceded 2 weeks ago, the tail consequent encroachment, everything was overlapped. Like, price was really heavy, and our level was pegged like game busters. Everything was delivered to. Not too much of a story. So I'll talk. This is the draw liquidity for next week. This just coming week. So sell side previous. It should be previous week's low. Previous week's low. So previous week's low, not previous day's low. Come on. That's for the next week. It will become a previous week low. That's this just concluded week. That's a draw on liquidity for me. So on the daily time frame, I'll be in a very quick mode right now. So we can see this level, right? This is not the best view possible, but I'll just use this so it will be easy. So all this level, why I left them is because it was the level we spoke about last week. This level, I told you, is a daytime. In as much price stay below here, it's consequent encroachment, daily bearish variation. Like, there are multiple arrays stacked together. It's a CB, it's a daily bearish inversion, fair value gap upper quadrant level, like stacking of multiple PD arrays. We spoke about that last week, and it's a high probability for sell side delivery. Then I say in as much body stays in its consequent encroachment or below there. Like, I want price to actually enter there. I was giving a tolerance but it shouldn't go beyond this consequent encroachment, like stuff that I said on the British pound in this video. So that was what I was saying before this just concluded week happened, that if that happens, then it becomes a high probability on a higher time frame basis, that's 4 hour and daily, if the body did not close above the midpoint of this inefficiency, this one over here, the body did not close below above its consequent encroachment, that's above its midpoint, then what do I say? Then draw liquidity will be the monthly quarterly shift at 1.07779, which was this level I actually showed you on the monthly. So, and we saw that Monday opened, we couldn't even get there. Like I told you, like, unfortunately we couldn't reach where we wanted it to go to, but that's a plus for it, that, man, I'm gonna fall lower. And what happened? Monday down, Tuesday down, Wednesday bam. So I spoke about that on the European British pound. So those levels we spoke to, if price fails to reach there, so you expect, that's why I say large range down close candle, especially that immediate rebalance. That's a killer. If it cannot go beyond that immediate rebalance on the British pound, then you expect even more than this. So that's that for last week. So I left that so I can talk about it this week. So since I'm done with that, I can just delete it. This level is discount basic drawn liquidity. What's that? Nope. I want that to access an inversion fair value gap, and it actually did that already. It's no more a drawn liquidity. I won't be taking it out on this time frame, but it's more like an inversion fair value gap. Not a drawn liquidity anymore. Bearish inversion fair value gap. So, and it was used on Friday. I told you Thursday and Friday went into premium, so it was used, like, Friday came into here, and look at how we delivered. So what I'll be looking for this week is, let me take this off for a moment from this time frame. Okay, it's just on the daily. Is it a daily time frame? Let me see the inefficiency. Yes, it's actually on the daily. So it's not, is it named weekly? No, it's daily. It's daily. So it's daily. So that was used as inversion fair value gap on Friday. We can see this high went into it right here and rejected. So it's on the daily. It will be remain on that time frame. As we go into lower time frame, I'll be adjusting it. So for this coming week, we see that Thursday went up, Friday went up. This is a order block. This is the opening price right here. Let me make it very clear. So that's daily bearish order block opening price. The bodies, what do you say? They couldn't go above it. Then look, before that opening price, this is Tuesday. the consequent encroachment of this week of Tuesday, which was what I'm using for my last line of defense on the British pound. Consequent encroachment. So the consequent encroachment here for European dollar here, consequent encroachment, price actually colored above it. But I'll be treating this too, which is Thursday, Friday, as a mohawk. That is a little bit of coloring above a level. That is, if like an inefficiency now, it might go above it but does not invalidate the the anticipated performance that should be depicted from price trading to that level. So this colored above, it would have been better if it was below it, but it's colored, so I'll be treating it as a mohawk. It's an ICT concept. So if you watch those videos, you can hear that. So those who knows it, but a mohawk is like something that go a little bit beyond what you're expecting. So that was why I was telling you in the British pound that, okay, I permit price can go beyond here, but it will lessen the probability, but I'm giving it tolerance. So this kind of tolerance is what I'm giving in for price to go there, but it's better to sit in wicks than in bodies. The bodies are the mohawks. So here the bodies is the mohawk. So but that level I still, because I've seen it multiple times, bodies close above that, and it still delivered perfectly well. Yeah, it delivered. Initially I was like, oh, no, it's not invalidated. It's still okay. That's the table, by the way. Sorry for that. So price is here. This level is still important for me. So these levels we've all traded today. We know it was all side draw liquidity that we're using for this just concluded 2 weeks, and everything has been delivered to. So I don't see a reason why they should be disturbing anymore. So, and this level, before I go to the lower time frame, this level is an inefficiency on the day weekly. So this is this weekly inefficiency. So it's like a balanced price range stroke main threshold of weekly bullish order block. So it was a deep discount initially, but now it's not so, but it's still discount now. Price is still way beyond that. But this level is like a main threshold of this 3 down close candle. This one is an up close candle. That's why it's not, I will have counted all 5. 1, 2, 3, 4. But this is an up close candle. This one is an up close candle. So it's not counted. So it's just those 3. The main threshold here about this level, this inefficiency, is consequent encroachment. So I'm watching that very, very closely. The way price behaves there is very important, because we can actually see this guy out of here. The main threshold that can easily the consequent encroachment for this inefficiency can easily depict it. So you can see price was above it. So it's like price was, and that was why you see this deep retracement. So I'm anticipating next week for us to close below this consequent. If we cannot do that, then it's very low for us to see sell side delivery. But in as much Monday, Tuesday, Wednesday close below here, then it's exceptional for Friday. Friday can do anything. It can rip up high. I'll tell you my bias at the end of this video for Friday NFP. So I don't have to be right. This is what I'm expecting based on what has been done and how manipulation is usually done with my experience. That's what I'll just, not what will happen. So here I want price to actually close below here coming this week. So this midpoint, if price begins to close below here, then I would like it. Then this sell side will be visited, which is here, sell side previous week's low. So that's it. So we can see this other block. Friday has done it. Inefficiency. All this is good enough. So this level, note it. I'll talk about it on the lower time frame. It's a CB that was actually overlapped to the upside and overlapped again to the downside. So I said something like that in the British pound, that it can get overlap up and still come down again. It's acceptable in some scenarios, like in this kind of situation, like it's down now. But how are we going to use that information? So we'll be going below that. So next week I wouldn't want price to go so much beyond here, so much beyond here. So let's go on the forward time frame, trying to rush this as fast as possible. So you already noticed the inefficiency. So let me just okay, actually see something here. The consequent encroachment, there's some body closures below it. Can you see that? And you remember I told you 4 hours and higher time frame. So let's look at the 1 hour before I come back to see what I want to say. Okay, 1 hour even closed well. So to me, I think we're still bearish. On the daily, weekly, it was like, oh no, and daily. But you can see on the 1 hour, we had closed below the consequent encroachment. This white line is the midpoint of this BC, balanced price range. So it's like a main threshold of that other block. So body closed below here on the 1 hour and also on the 4 hour time frame. So I like that, which means there's a very high probability that we'll still be offering sell side delivery based on what I've seen here. But for now, let this be out of here, so we can see. So here we go. Remember this level I told you on the daily. Remember that level. I won't go back there in this video. I see, take note of that because I'll be discussing about that here quickly. This level also, look at that. So this is for who wants to know. Let me put in the left. I can actually leave that staying there. Middle will be better. Center, and let's make it bold. So that's the remaining unfilled CB. This CB here, this part is unfilled. Like basically the candle hasn't gone closed into it, so it's the remaining unfilled, and I'm using that as my last line of defense, which is I don't want price to go there at all. But price can go there. If it goes there, that's my last line of defense. It should not exit there. I don't want it. If it goes beyond that and overlaps it, then something is happening. Either everything has changed and we're switching the gears, or we're having a very, very deep retracement. So that's my last line of defense for the European dollar. And here we go. This inefficiency on daily. This is a 4-hour bearish inversion favor lookup. To me, that's the highest premium I want the European dollar to go to. Recently on Friday, I saw some very animated move. The European dollar was behaving like the British pound, because the British pound is like the NQ. European dollar is like the ES for the futures comparison. ES is a little bit more calm, NQ is very volatile, and also in the Forex, British pound is a little bit more volatile, European dollar is a little bit. But on Friday, European dollar was bunk. Like European dollar was terrible. It was ripping crazily. Like once the news was hitting, European dollar was doing like ×5 of what was happening on the British pound. So I didn't know. Now that's really how I saw that on Friday. That European dollar has not been doing that much, except to be going to the downside. And yeah, it's been doing that very well. But that upside, I saw a lot of that in the Friday London section. Yeah. So that's, to me, this level is the highest. Back to this price, what I was discussing is the highest premium for me for European dollar, because I wouldn't want so much of upward retracement. So this level, we'll be talking about that as we go down. It's on the 60-minute time frame. So I told this is my drawn liquidity, previous week's low. So that's it. And the discount array, which I already took out. But for now, I don't want to be too anticipatory, because this is NFP. So to me, once it reaches here, I'm okay. If it reaches here at or before, maybe Wednesday, or at 11 a.m. on Wednesday, I'm okay with that. I don't need to trade again, I just allow NFP to do whatever it wants to do. If I want to trade after NFP, that's left to me based on what price is done. But on Thursday, I won't be trading anything. I don't want to trade on Thursdays of NFP. I don't like that. I don't like that kind of price action that usually shows up on Thursday. So this is a buy-side liquidity that was traded to on Friday. So I used that as a suspect rate. So it went there about 9 o'clock. So, and it went there and rejected. So that was buy-side liquidity, and it was traded to. That's why I say I didn't mean price closed here. Then I can expect this week that will be coming now to do all this. But we already did this Thursday, Friday, starting from Wednesday, from the 9, from after 8. We look at that. That's like a whole of Thursday going up. Then a part of Friday went up also till about 8 too. And we started from 8 here. So that was 8 o'clock here to 8 o'clock here on Thursday, 24 hours, to another 8 o'clock here on Friday. That's like 2 days going up. That's enough. Like, it's enough of premium. So we should not be going too much of premium again this coming week. That's why I say here is the highest premium for me. This level, I would love price to actually stay below here. That's for high probability sell side delivery. Price should not exit here. But if price should exit here, to me, this is enough. This is enough. And this is actually 60-minute bearish breaker, the midpoint. So this here, you can see these candles here, these two. This is an up close, so I'm using these two. So in my mind, I used to use it like a macro perspective. Like this is a high, a low, and a higher high. This might not be very correct actually. So, but this is just like I'm treating it like a breaker. Let's say that word. Let me just give it like it is, like a breaker. So that level, to me, it's one of the level that most price is trading into. I want to be seeing this kind of aggressive displacement lower. But based on my interest, I would not really want price to do that at all. So on the 15 minutes time frame, I was trying to recall something last week. I said I still calls it the bellwether time frame, so I can remember it now. So the sell side was used here. So this is the drawn liquidity. I'll make that price to be there. Come on. which is 1.07613. 13, sorry, not 13. Sell side was taken out here. Sell side was taken out here on Friday. We came down. So now I told you here it's like a bearish premium. This is the bearish inversion favorable gap on the 4-hour time frame. We'll talk about that as we're coming. That was it on the 4-hour time frame. That's the level there here. So back to the 15-minute time frame. If price goes above here, which is the highest for me, and still extend, this is the main threshold. You can see this down close candle. Everything was down from here. 1, 2, 3, 4, 5, 6. So the midpoint's about here. That's this white line here that you're seeing. I see the bearish breaker main threshold, like a breaker. Obviously, you want to see breaker coming high here, but I don't want that deep discount. That's why I marked this red line here. This red line now will be treating like a potential institutional order flow entry level, like a level that it should be like a institutional order flow level here. This level. So if price I don't want price to go there. It will be better as a breakaway. But if price goes there, I want it to emit, like it should not be overlapping this inefficiency at all. This 1115 inefficiency. It's just, if it goes there, it should just pop in, and that would be like a very great premium, like to sell at. If you get price at that, that's like it's beautiful for me. If price should turn there, if it will be going sell side, that's like a smart money reversal for me. If price goes there, I will not, like the high of the week should not exit here, with an exception of NFP, by the way. Friday can come here and tear off all this level. Everything I'm saying here is based on Monday, Tuesday, Wednesday. Friday can disrupt everything, but for Monday, Tuesday, Wednesday, Thursday I don't want to trade it. So Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, and Wednesday. Sorry, that's what I'm looking at. So it can come here. That will be like a beautiful institutional order for entry for anybody who sees that and it's on chart on that time, because you can do that in Asia or London and you will not be there to pick it up. So once it does that, I want price to just do the same signature like I said on the. So if price retraces here Sunday, Monday, coming into here, I like this level. I don't want it to exceed here, but should price want to exceed here and still go higher, then this is highest premium for me. If it still wants to go a little bit higher, then this is it. We should not be going beyond here, and I want it to just fall lower. This is a new week opening gap on this level here, seeing like dark lines. It's new week opening gap, so you might get the entry there maybe during the New York section. Then price can go lower and target our levels and all those things. So that's what I'm anticipating. So this is a new week opening gap. You can see that 11th June and the high and low. That's the level here. So I made it faint because it was disrupted. It was annoying to my eye. So that's the level. Sell side delivery is what I favor. I'm not bullish, I'm bearish. So this is the general liquidity. These are the premium level I'm looking at. This inversion favorable gap. This is the daily. I told you to know that level. To me, that's the best. It's good. I like that, and it should not exit. But I'm giving it tolerance here, and this is like a highest premium. Like it's premium, and if premium still gets going beyond, this is institutional order flow to do. If that begins to fail, so my last lines of defense, I don't want this high to be traded to again. Like I don't want that. It's done enough for me. Let's see the 60 minutes time frame. So this is my last line of defense over here. So if once price is reaching here, then I know something might be going on in the chart, and it's not a market that you want to go in and risk all in and lose all your capital and whatever. So that is that for that, and I wanted this to show on the 50 minutes time frame because I was looking for it, I couldn't find it. So that's the last line of defense there. That's it, and that's my bias. So that's all for now, and just concluding, I spoke to you on Nasdaq. You can watch the video last week's top-down analysis. I told you that buy-side general liquidity is 20,680 big figure. That's where I want for buy-side delivery. So I told you this is a daily order block. This is it. Opening price of daily order block. This is the opening price of this candle, and we can see how price actually Monday came in, Wednesday came in here, took out sell side here, traded into the order block, into the main threshold, immediately rejected, and we can see how we went right to reprice the high. So everything was, I just spoke on it really quickly like I will also do here. It might even be up to 2 minutes and I'll be out of here. So that was it. and I really made my 2 minutes this time around because in British pound I said 3 minutes and I spent more than that. So we just came in here and that was it. I saw this, I was expecting this volume imbalance. I didn't post about it, but I was in my mind looking at it. Are we going to come in here? Because if you go to the lower time frame, it was as if it wouldn't be coming to that volume imbalance anymore. But I was watching if it should be doing that, that would be excellent. What was the volume imbalance? I can't see it much here. Let me see it on the 1 hour. Okay, this is the volume imbalance. So I was watching it here as price came in here. I was like, okay, I'm gonna get this coming here again, or this is all it should do. But price didn't do it all. It came in here into this in. By the way, I'll be using a rectangle. I don't want to spend 2 minutes here, so let me be fast. Here, this is the volume imbalance, and price came in here Thursday, and you can see how the reaction was. We went right, and my drawn liquidity, which was buy side, it was met here. So this is a little bit range. Like, look at that. It's just in a range. You see that? It's very difficult for the futures traders that are not very vast to be able to weather through this, stormy see price action. So what am I expecting next week? Let me see. I don't even know. Well, this inefficiency right here is on the weekly time frame. I hope I'm not spending 2 minutes. On the weekly time frame, if it gets overlapped this coming week on the daily, if it can get overlapped, then if that happens, then buy side delivery should continue. That's with an exception of NFP, please. So if we can, can see all this distortion here, all this even made it worse. All this, like, look at it. But if price can actually, like how it's closed here, if you can see something like that next week and close above the consequent encroachment of Friday, if you close above that, you can be watching it. If you close above that, well above this inefficiency on the weekly, then we can be seeing it trade into this higher point of this premium CB here, and hopefully this high here about 21,049 big figure, and hopefully here the best of the best 21,237.75. So there you go. That's that for I think 2 minutes almost exceeded. That's that for my Nasdaq. I didn't talk much about ES, but you can see here buy side is here, is high. Whatever you see that's 5,927.25. So 25. So that's buy side for me. Buy side liquidity. I can't say if we'll be going there, but that's just what I'm watching. So if price begins to open and close above the consequent equipment of Friday's week, which is about this point, the midpoint, and you see that same signature on the weekly time frame for the Nasdaq that I told you of, that inefficiency on the weekly. If price goes above that, then we can actually anticipate price higher on the ES to actually trade to that level. But even before that, once price begins to close above the consequent equipment of Friday still, weeks rather, you can be looking at the buy side here, Tuesday's high, and all those kind of prices. To me, I think it might still want to go up. This looks a little bit suspicious. So closing thoughts for the NFP, what I'll be anticipating is if price does everything and trades here on, listen please, these are the conditions. If price trades here on Wednesday for the European dollar and for the British pound, price actually trade below here also, which is this sell side. So if price does that on Wednesday or Thursday, whatever, before NFP release, then I'll be anticipating NFP release to do this one of two things. Now it can actually, we've been going down for a long time. Throughout October, I've been sell side deliveries throughout. We've been going down since October here. We've been just been going down and down. So NFP might actually change this and offer buy side delivery in November. If price goes below here, then NFP can make a Judas, which we go into inefficiency. It can dip into this inefficiency well and actually come lower, and then goes higher, and then we just begin to deliver buy side coming November throughout. Or NFP can do a Judas, which will be an upside Judas. If it does an upside Judas, as it whips up, then it can even plunge lower, and throughout the end of 2024, we just keep going lower. Like we just be seeing lower prices, we're targeting this low over here, and just be going down, And in British pound, if anything happens, and a candle on a daily time frame close below, like overlaps this completely, Like, this is the last line of defense for the bulls. If there's any hope for them to go up with this NFP, if anything close below here, then to me, I told you, the British bar should tank lower. It should go. I want it. It might not do that, but like, that's what I really want to see. That's what I really want to see. If price close below here, then it should just aggressively go down. So that's what I'm looking for, NFP. But if those levels were not traded to, which is this low here on the British pound and this low here on the European dollar here, if those levels are not traded to Monday, Tuesday, Wednesday, Thursday, and even before NFP release, then there might be alteration in what I've said. NFP can either do a Judas up and trade to that level and keep going down, or trade to that level as a Judas and then still change. But NFP has the potential of changing everything that has been happening since October here. They usually use these drivers to change price direction, and CPI also will be released, not this week, maybe coming week or so, FOMC, all those kind of things. It can easily change this, and we can be seeing buy side, and we can be running to target this buy side delivery here. So I don't want to talk about this too much. It's beyond the scope of this discussion, but that's my expectation for NFP. So hopefully someone gains some insight here, and you can comment, you can like, you can subscribe if you like the work, you encourage me, and have a great week. Have a great week.